Let's focus in now on private equity and the Middle East. You heard the CEO of Mumtalakat Bahrain's sovereign wealth fund saying they're very focused on private equity right now. Well, I spoke with the CEO of Abraaj Capital. It's the region's largest private equity firm. Its 5 funds manage about $6 billion in assets. It's kept a low profile during the crisis, but it's been raising capital and getting ready to return to buying. I spoke earlier today with Arif Naqvi, the CEO, and asked him if there's any apprehension about putting money to work in the Gulf.
I think investors are actually beginning to focus on quality and are beginning to differentiate between fund managers. So we're very comfortable that with a very, very loyal investor base that understands the difference between qualitative products that are being offered, we continue to do very well.
Give me your assessment of the true concern out there about sovereign debt, about debt levels in Dubai.
Globally or regionally?
Regionally.
Regionally. Well, you see, I think it's in a sense overrated, and I'll tell you why. Because Dubai is a real city and a real economy. And if you look at the infrastructure, you've been there just recently, if you look at the infrastructure, it's been created and will pay dividends to the local population for the next 50 years. And so long as you believe in the future of oil, not just being at this level, but just being the engine of global growth, and you have to remember that the GCC sits on 60% of the world's oil reserves, but only produces 30% annually. And so long as that story continues to hold current, Dubai is one of the gateways to the region, one of, if not the most important. So I believe very strongly in the long-term future.
So you would view this, the debt situation there differently from that of Greece, of Spain, of Portugal, because of?
For 2 very simple reasons, apart from oil. One is that it is a part of a very strong federation called the UAE, which is one of the richest and most solvent countries in the world. And the second is that this is a temporary hiccup, and the capital is going to be made available and is available. It's a restructuring process. Every economy goes through it. And I think that we had some very heady days in the last few years. So real estate did jump up a little bit more than it should have. And I think in turn, when the real estate market came down, it led to a little bit of a loss of investor confidence, but I think it's coming back.